A politician's high-stakes gamble, paid for by the Netherlands. Why is China the winner? The scenario of a former prime minister of a small European country single-handedly toppling the global trillion-dollar auto industry, causing American Ford and German Volkswagen to collectively cry poor, and dragging his own nation into a $33 billion compensation abyss. Sounds like the plot of an absurd drama, but it is genuinely unfolding in the Netherlands. Even more disruptive is the fact that the Dutch nightmare only began after the instigator of this global crisis, Schoof, stepped down, and the biggest beneficiary turned out to be the very country he was targeting, China. Let's simplify the complex chip rivalry. A car is like a smartphone on wheels, and the chip is its central nervous system. Nexperia's automotive-grade power semiconductors are the hard valves. Without them, the engine won't start, the safety systems won't function, and even the most luxurious car is just a pile of scrap metal. 1 in every 5 cars globally uses Nexperia's chips, making its status more precious than oil. Even more shocking is that this chip giant was acquired by China's Tech technology for $33 billion. Furthermore, to integrate into Europe, Tech voluntarily put on golden handcuffs, promising no layoffs and guaranteed tax revenue, with a penalty of billions of euros for breach of contract. Yet, no one expected that the Dutch government's forced takeover would essentially unlock these shackles for China and hand them the legal basis for full compensation. This whole farce involves the short-sightedness of a politician, the wails of car manufacturers, and China's firm counterattack. Next, let's break down the details. What poor chess move did Schoof make? Why are global car companies collectively pressuring the Dutch government? And on what grounds is China's $33 billion compensation claim guaranteed to win? Schoof's political gamble. Schoof's political gamble was marked by opportunism from the start. Seeing the U.S. Chips and Science Act drop a $39 billion subsidy and receiving hints from the White House to restrict chip technology to China, the former Dutch Prime Minister immediately viewed Nexperia as a token of allegiance to curry favor with the United States. In late September 2025, he forcibly ordered the custodianship of Nexperia's European headquarters under the guise of national security, demanding that all technology patents and supply chain authority be taken over, a blatant commercial act of the cuckoo taking over the magpie's nest. He believed this deal was a surefire win. He could hop on the fast track of the U.S. chip alliance while seizing control of a Chinese company's core assets. What he forgot was that Nexperia wasn't just any company. After the acquisition, Tech not only did not lay off a single European employee but also created hundreds of new R&D jobs, increasing its tax contribution to the Netherlands by 15% in 2023. More crucially, the global auto industry had long considered Nexperia's chips their lifeline. His actions were tantamount to directly severing the blood supply for carmakers worldwide. Commentary: Schoof's absurdity lies in treating the nation's credibility as a chip for his personal political future. He only saw the lure of U.S. subsidies and ignored the Netherlands' core competitiveness as the gateway to Europe, openness and trust. Nexperia's success was a model of global cooperation, with Chinese capital, European technology, and the global market forming a perfect closed loop. By using political intervention to disrupt this balance, he ended up losing his position and turning the Netherlands into a public enemy of global car companies. This self-defeating move is not diplomatic wisdom, it is the naked exposure of political short-sightedness, global automakers' collective pressure. The tidal wave of chain reactions came faster and fiercer than industry analysts predicted. U.S. Ford was the first to sound the alarm, announcing that if the chip shortage continued, 5 factories in Michigan and Kentucky would completely halt production, resulting in a daily loss of up to $200 million. They also prepared compensation claims for hundreds of millions of euros, directly accusing the Dutch government of political breach of contract. General Motors was even tougher, immediately freezing advance payments to Dutch component suppliers. CEO Mary Barra, in a hearing, angrily criticized, "This is using the global industrial chain as a political bet, and we will absolutely not pay the price." European automakers are having an even tougher time. Germany's Volkswagen Wolfsburg plant directly reduced production by 30%. The Audi Q5 production line was forced to pause, losing over $300 million per day. Volvo's Belgian plant simply gave employees unpaid long leave, and the Swedish headquarters admitted to a monthly cash flow reduction of €2 billion. Even Brazilian car manufacturers in South America panicked, sending a delegation urgently to China, hoping to bypass Europe and get chips directly from Nexperia's Chinese factory. Data shows that this crisis has already caused the global auto industry to lose over €12 billion per week, equivalent to 1.5% of the Netherlands' annual GDP. Commentary: the collective wail of global automakers punctures the lie of technological decoupling. In the era of globalization, the chip industry chain is inextricably linked: US design, Dutch manufacturing, Chinese packaging, and global usage. A hiccup in any link triggers a butterfly effect. Schoof thought that crippling Nexperia would please the US, but he failed to realize that European car companies' reliance on the chips was far greater than America's. As losses for VW and BMW translated into political pressure on the Dutch government, and compensation letters from US automakers piled up in The Hague's offices, the Netherlands discovered it had become a scapegoat for the US chip strategy, China's named counterattack and legal victory. Most ironically, the Dutch government's seizure of power has instead given the Chinese company complete control. When Wingtech acquired Nexperia in 2019, to pass Dutch review, it signed what were essentially unequal commitment clauses. Not only had it to retain the European headquarters but also guarantee local employment, with a penalty of billions of euros for any violation. These golden handcuffs were meant to restrain the Chinese enterprise, but the Netherlands' unilateral custodianship constituted a fundamental breach of contract, instantly nullifying those terms. The Chinese company's counterattack is a textbook case. Nexperia China first released an open letter, stating explicitly that the decision of the Dutch headquarters is invalid within China's borders, and then issued 3 new rules. European customers must re-sign supply agreements, payments must be settled in RMB, and orders will prioritize the Chinese market. These 3 moves directly seized the Netherlands' choke point. Nexperia's Chinese factories account for 45% of global capacity. Without the support of Chinese capacity, the European headquarters is just an empty shell. Even more assertively, the Chinese legal team has initiated international arbitration, demanding that the Netherlands compensate the $33 billion investment principal and interest based on the China-Netherlands Bilateral Investment Treaty and international law. Commentary: the Chinese company's counterattack won on the basis of having a just cause and hard power. Unlike the Netherlands' unreasonableness, every step taken by China adhered to legal boundaries, using the opponent's breach to lift its own restraints, utilizing capacity advantage to control the supply chain, and using international law as the basis for compensation. This is not just about defending the company's rights but also about setting a rule for global investors. Chinese assets are not soft targets to be plundered at will. Conversely, the Netherlands sought to seize assets without bearing responsibility, and to both appease the US and keep the Chinese market. This kind of wavering will only cause it to completely lose its footing in the global industrial chain. The consequence: the Netherlands is isolated. After Schoof stepped down, the new Dutch government realized it had inherited a hot potato. On one hand, global compensation claims poured in. Before China's $33 billion claim was even negotiated, compensation letters from Ford and GM were already piled high, and Volkswagen even formed a compensation alliance with BMW and Mercedes-Benz, demanding that the Netherlands pay at least €12 billion. On the other hand, the nation's credibility plummeted. Samsung announced a pause on its €1 billion chip investment in the Netherlands, and TSMC postponed the construction plan for its Eindhoven factory. The Dutch Financial Daily lamented, "Our image as a reliable partner, built up over decades, has been destroyed by one politician. What is even more headaches for the Netherlands is the US's turning a blind eye." When Schoof was trying to curry favor with the US, the White House promised to provide support. But now that the Netherlands is in crisis, the US is busy giving subsidies to Intel and Micron, ignoring the Netherlands' pleas for help. The US Rand Corporation even publicly stated, "The Netherlands' action was an autonomous choice and should not expect the US to bear the consequences." With this, the Netherlands became completely isolated. It offended China, its largest market, and was then treated as a pawn by the US, truly losing on all fronts. Commentary: the trend of global technological development has never been about closure, but about integration. The US blockade and the Netherlands' opportunism are essentially movements against the tide and are bound to be abandoned by the era. China's position is clear: we support global technological cooperation, but we will never allow our core assets to be arbitrarily plundered. We advocate for world peace and security but also possess sufficient strength to defend our own interests. This chip rivalry proves that whoever respects the rules and insists on cooperation will gain a foothold in the global industrial chain. Whoever engages in political manipulation and breaks the rules will ultimately shoot themselves in the foot. Schoof's political gamble ultimately ended with the Netherlands in a position of complete passivity. This is not just the failure of a politician but the bankruptcy of a flawed development philosophy. We will continue to follow how the new Dutch government addresses the compensation claims and whether the global chip industry chain can stabilize in the future.